Malaysia saw the quickest recovery in terms of tourist arrivals among its regional peers in 2022, driven by visitors from Singapore. According to a report by StanChart Global Research, last year's numbers bounced back to 92% of 2019 levels. In comparison, tourist arrivals to Indonesia, the Philippines, Singapore, Thailand and Vietnam recovered to an average of about 60% of 2019 levels as international travel resumed in 2022. The research also noted that the return of tourists from China and Hong Kong was slower at about 18.4% of pre-pandemic levels due to the border control policies. From a current account perspective, Thailand is expected to record the largest improvement in its travel balance this year, after improving to 0.8% of gross domestic product in 2022. That's still far short of the 2017 to 2019 average of 8.6% of GDP. Second would be Malaysia, which saw its travel balance improve to negative 0.1% of GDP in 2022, though it remains below the 2017 to 2019 average of 2.2% of GDP. The report said improving travel balances should continue to support the Thai baht and Malaysian ringgit. AirAsia Group founder Tan Sri Tony Fernandes is preparing to step back from the front lines, said a Bloomberg report. Good leadership is to know when to go, Fernandes was quoted as saying in a recent interview in Singapore. Aviation as my journey might be coming to an end. I've got to talk about succession planning. Exactly when I press the button, I don't know. But I want to talk about it because I want to attract the right leaders, he reportedly said. Fernandes told Bloomberg News he is looking to move on to private equity with an active management and helping young people change things. He also believes there is a low-cost model for education and health, the two things that discriminate people the most. As for who will take the reins at AirAsia, Fernandes reportedly prefers someone from within the company and Southeast Asia at the heart of its operations, though he didn't rule anything out. Tokio Marine Holdings Inc. is said to be considering a sale of its life insurance business in Southeast Asia as the Japanese insurer looks to focus on its core operations. Citing people familiar with the matter, Bloomberg said the business could be valued at about $1 billion, approximately 4.45 billion ringgit in a deal. Its sources said the Tokyo-listed firm is working with an advisor to gauge investor interest in its life insurance units in Indonesia, Malaysia, Singapore and Thailand. They said Tokio Marine prefers to find a buyer for all of the assets, though it's also considering a piecemeal deal. According to one of the people, a formal sale process can commence in the coming months, the report said. Considerations are in an early stage, and Tokio Marine could decide to keep the assets for longer. In response to a Bloomberg News query, a spokesperson for the company said it always considers disciplined mergers and acquisitions and reviews its business portfolio in general to improve profitability and achieve sustainable growth. Nothing has been decided at the moment, the spokesperson said, declining to comment further. Nestlé Malaysia saw its first quarter FY 2023 net profit ease 3.9% from the previous year, pressured by higher commodity prices and unfavorable foreign exchange rates, even as revenue improved. The food giant said in a bourse filing that earnings fell to 197.15 million ringgit, while revenue grew 8.8% to 1.84 billion ringgit. Its CEO Wan Aranos said though food commodity prices are expected to stay high through the first half of this year, the company is optimistic that this will improve in the remaining 6 months. Over the long term, he said the group remains confident in Malaysia's prospects, as demonstrated by its next wave of capital investments with 1 billion ringgit planned for 2023 to 2025. Nestlé Malaysia will also accelerate its environmental, social and governance objectives with clear plans in place. Its shares closed 1.4% higher at 136 ringgit and 50 cents today, giving the group a market capitalization of 32.01 billion ringgit. Petronas Chemicals Group has inked an agreement to sell a 25% stake in Petronas Chemicals Fertilizer Sabah (PCFS) to Sabah state-owned oil and gas player SMJ for 1.2 billion ringgit. The deal comes 3 months after the two parties signed a heads of agreement for the 25% divestment in PCFS. It is part of PetChem's strategic effort to position itself as a preferred partner in shaping and implementing efforts to sustain and grow its petrochemicals business in Sabah. Upon completion of the stake sale, it will hold 75% of the unit. In a joint statement, PetChem Managing Director and CEO Muhammad Yusof said the move will further strengthen the working relationship between PetChem and the state of Sabah and unlock potential for similar collaborations in the future. It is also expected to further spur the development within the Sipitang Oil and Gas Industrial Park. Shares in PetChem closed unchanged at RM7.20 a day, giving the group a market capitalization of 57.6 billion ringgit.